Who control Forex market? Who own the Forex? Hello, this is Igor from FX Igor YouTube channel, and today I have one free topic that can be very interesting for theory but in practice too. So let me start from the beginning. As we know, there are a lot of traders around the globe, and everyone trade Forex. Even you go to the exchange office and change your euros into dollars, your dollars into euros, you participate in the Forex market. And the question is, does anyone control Forex trading? An institution? When I press the button on my MetaTrader platform or some other platform, who control all of that? And when we want to start the live account trading, we always have in our guts, we're afraid, is someone monitor this and trade against me? And this is some common questions from beginner traders. So in this video, I will try to give some answers and to give you some facts. Maybe that facts can help you to become better in trading, maybe to get some news or to monitor some things in better way and increase your accuracy during trading. Who knows? Let me start first from the main question: who controls Forex? The Forex market is not controlled by any single entity institution because it's a decentralized market where there's no one physical location where investors go to buy or sell currencies. However, top 10 leading commercial banks that do not control but move the Forex market have almost 66% of market share. And this information you need to remember. This information is very important. So in the first way, when we talked a few weeks ago about how Forex works and etc., I talked about over-the-counter OTC market and everything. I don't want to repeat all that stuff. I just want to tell you that you need to understand that in the simple way, we have the systems with the thousands and thousands of computers, but that system is pretty simple. If you look a little bit, the major system, how that Forex works and this Forex trading decentralized system, you can see that they're one-time broker as a firm that connects traders, the Forex market. They execute trades on behalf of their clients. They can be online brokers or traditional brokers, and they charge the fees using the spread, and etc. etc. Then you have a market makers. It's a financial institution, but at the same time, your brokerage company can be market maker, and usually all top brokers I cooperate with, all that broker are market makers in the same time, and they provide liquidity to the Forex market. They're very important. And market makers typically operate by maintaining an inventory of various currencies, and they make their profits from the difference between buying and selling prices. And last, multilateral trading facility is a trading venue that operates in an electronic system and designed to provide transparent, competitive trading environment. So just think as a platform where participants execute trades with each other. So if you see the brokerage company and the trading facility, you all in your mind and in your brain, you can see a very simple way how Forex market works. But there is one question is that can some big player or participant in the Forex market so big, so strong, they can manipulate prices? Or can I monitor something in Forex market just to be better in prediction? This is the questions that analysts and traders ask themselves all the time. First, the way how banks work is completely correlated with Forex market. Actually, Forex market cannot without banks. And you know, when you have a central bank and they charge commercial bank 2.25%, then the commercial bank will charge individuals 3%. They earn money using the loans, using the credits. They have their business. But the business is not to predict the future Forex price. However, they exchange money from euros to dollars, from dollars to euros to Swiss franc to Japanese yen to Canadian dollar to Aussie dollar, hundreds of currency pairs. And because of that exchange, banks from central bank up to commercial banks, all of them participate in the Forex market. So if I want to find who impacts in Forex, the 12 most important participants in the Forex market are commercial banks, governments and central banks, hedge funds, real money, sovereign wealth funds, prime brokers, retail brokers, proprietary trading firms, money transfer companies, foreign exchange fixing, commercial companies, and retail trade. I know if we analyze this, the big players actually Forex market are not individual small retail traders. Now, there are a lot of them. There are thousands and thousands, but the market share from retail traders is so small. So the biggest players in the Forex market are commercial banks, governments and central banks, hedge funds, sovereign wealth fund. And on that list are retail traders and proprietary trading firms. But like I said, these 4 big players are really, really big. And now I can give another answer. Who own Forex? The Forex market is not owned by any single entity or institution because it is a decentralized market without a physical location. The top 10 leading commercial banks have almost 66% of the market share, but they do not control the market. They only have the impact of the market movement. And the central banks, they do the biggest and most important thing for our traders because they provide interest rate decisions, currency interventions, foreign exchange reserves. They have public statements. They do monetary policy announcements. They do open market operations. They do some economic stability measures. They do inflation control. And every single move of the central bank change the environment. And after that move, traders make decisions. And because of that, Forex price is changing. So the people who do analysis related to central bank decisions do actually fundamental analysis. And when you make combination of fundamental and technical analysis, you make combinations of the charts and all these reports, you do good analysis that can help you to make the Forex trading decision. Now, I want to share something new for you. In 2023, this year, we got some interesting facts about big banks and their market share. And believe me, it's completely different than from the report last year. Why? Because JP Morgan was on the first place and one of the biggest banks in the world, but right now for Forex market, the biggest commercial bank is Deutsche Bank, and they have a market share of 10.89%. Remarkable. And when you sum all these top 10 banks' commercial market share, you will get that they keep almost 66% of all market share. And this is the remarkable. Now, after commercial banks and central banks, the big players are hedge funds. You know about Bridgewater Associates, Renaissance Technologies, Man Group, Capital Management, Two Sigma, BlackRock, a lot of big hedge funds. The real big money there. They really invest in change and exchange and the impact Forex market. Of course, not like this previous 2 big players, but they're really, really important in trading market. They have a limited partners, general partners, board of directors. They have organization. They're really, like I said, important and well-organized companies, but their transaction size impact Forex market, and we don't need to forget that. Now, there is another thing that a lot of people do not talk about that, and I very, very often like to watch some analysis related to multinational companies. For example, Walmart, Amazon, Apple, ExxonMobil, Royal Dutch Shell, Volkswagen, Toyota Motor, Berkshire Hathaway, where is the Warren Buffett, Microsoft, Johnson & Johnson, and much more are all big multinational companies. When they make a purchase, exchange, when they buy and sell, they do have a strong impact on Forex market. So you need sometimes to think about that and to use that information sometimes in trading, in reports. I will just give you one practical example. When I need, for example, to calculate some price sometimes, I use a Big Mac index, if you know that. So the McDonald's is so big company in this world, and they have prices for sandwiches, for drinks, for everything, and they need to think globally. And what the interesting fact is, when they rise or decrease the price, they really do that very good. And sometimes you can think about that country and that country currency much better, because in that case you can see the economy using just the Big Mac index. Sometimes, of course, this is not very precise the methodology, but it's a good methodology sometimes to measure some currency, the problem with currency, etc., etc. And on the end, I want to talk about sovereign wealth funds. They're big funds. For example, Norwegian government pension fund, China Investment Corporation, Abu Dhabi Investment Authority, and I know a lot of these big sovereign wealth funds and their reports sometimes can impact forex market. So we and our analysts sometimes accept this central bank reports that everybody does. Sovereign wealth funds and some big corporations and their reports, sometimes we need to check, because they can be used in our machine learning models when we try to predict the future price changing. And sometimes you need to think about that. And sometimes when you just track the news, you just read some news about some big wealth fund or a big multinational corporation or a big commercial bank, that information about that, its impact. For example, the latest news about banks in US, in United States of America, how that news impact forex market, and how the dollar was weaker and weaker. It's not so big impact, but there is impact that, because if you have a problem with commercial banks, some big Silicon Valley bank just go to the bankruptcy, that information very often can impact the strong dollar. And on the end, I just want to tell, there is thousands and thousands, maybe hundreds of thousands retail investors, and we have a very small number of institutional investors. However, retail investors, the market share is maybe less than 8%. In some reports, we have maybe 5%. So between the 92 to 95% are big dogs, institutional traders, and they trade and they impact on the currency pair's price. However, you should think with your own head because of that. So if you watch a lot of websites, sentiment tables, how retail traders think, and should euro dollar is going into bullish or bearish section, is it euro stronger than dollar? What is the sentiment of the market for some brokerage company? That kind of information usually is not so good. Why? Because the big dogs, institutional investors, they trade. They're 95% of market share in their hand. And when they buy euro dollar, for example, they have power that is more than 10 times bigger and stronger than retail traders. So the sentiment index of the retail trader very often is contrary. If you use the contrary index of the dailyfx.com, they use information. So if they see that euro is very strong to the dollar, and you should buy euro, they think it's a good time to sell, because it's always opposite, because institutional traders usually do, not all the time, usually do different trades than retail trades, because they trade in the longer term. So, however, I just want to share some thoughts about trading, about participating in the market, and to just tell another time on the end, nobody controls forex market. So this is the completely decentralized system, and you should think always using your head and reports, and never think that somebody trades against you, because the forex market usually is a 50% game. When if you make a trade, put a stop loss and target risk reward 1-to-1, you need to know there is a 50% probability of chance that you can lose, get that trade. But if you use fundamental technical analysis, few percents you can get just because of that information. So I hope that you enjoyed this video. I wish you a great day and bye-bye.